Welcome to AI ConvoCast, where we bring you the latest in AI and tech innovation. Quick housekeeping. Check out the affiliate links in our description. Using them supports the show, and please don't forget to rate, review, and share if you like what you hear. Let's jump right in. Today, we will be exploring the recent reduction in tariffs between the United States and China, and how this significant policy shift impacts the artificial intelligence industry. With tariffs dramatically dropping from an eye-watering 145% to a much more manageable 30% on Chinese imports to the US, and similarly plunging from 125% down to just 10% on American exports entering China, AI firms and global markets are positioned to see immediate benefits alongside potential long-term strategic shifts. One of the clearest and most immediate effects will be felt in the costs of hardware and essential AI components. AI development hinges heavily on advanced GPUs, semiconductors, sensors, and servers. Many of these critical components are manufactured in China. The previous high tariffs significantly elevated operational expenses, slowed down innovation cycles, and especially disadvantaged smaller startups or medium-sized businesses lacking substantial financial reserves. Now, with tariffs greatly reduced, the financial burden of sourcing essential hardware will decrease substantially, enabling firms of all sizes to scale their operations more quickly and affordably. This shift will likely accelerate innovation, enhance product competitiveness, and could lead to lower prices for end users of AI-driven technologies. Additionally, the reduction in tariffs promises much-needed stabilization for global supply chains. The previously steep tariffs forced many AI firms to scramble, securing alternative suppliers or enduring costly delays and unpredictable disruptions. Supply chain management had become a critical pain point for companies navigating trade volatility, and many adopted diversified sourcing strategies involving suppliers in Vietnam, India, Mexico, and domestically within the US. While the easing tariffs will immediately restore smoother operations and improve predictability, the lessons learned from previous volatility mean most companies will probably continue diversifying their supply chains. This diversification not only shields them from potential future disruptions, but leverages AI-driven analytics and automation tools to further optimize logistics and inventory management. Market reactions to the tariff reduction have already been extremely positive. Technology stocks experienced a substantial rally following the announcement, with prominent AI-focused companies like Nvidia, AMD, Alibaba, and Tesla notably benefiting from renewed investor enthusiasm. Nvidia, which has faced challenges due to export controls and previously high tariffs, saw a significant bump in share price as investors anticipated reduced operational costs and improved margins. Similarly, AMD is poised to partially offset recent revenue hits caused by export controls, capitalizing on more affordable imports of mid-range hardware. This surge in investor sentiment could encourage additional investments into AI infrastructure, research and development, driving a wave of fresh innovations and stimulating overall industry growth. Speaking of competitive dynamics, the reduced tariffs are likely to reshape how American and Chinese AI firms position themselves globally. US-based companies, which had previously shifted emphasis towards domestic manufacturing and alternative supply regions, may resume importing hardware components directly from China, benefiting from substantial cost advantages. However, the tariff rollback doesn't entirely negate existing geopolitical barriers, particularly strict US export controls on advanced semiconductors. These controls still limit the transfer of cutting-edge technology, maintaining a degree of competitive separation and highlighting ongoing security concerns. On the Chinese side, firms such as ByteDance, Alibaba, and DeepSeek, who were previously constrained by limited access to advanced chips, could see immediate benefits from improved affordability of mid-level hardware imports. This newfound accessibility could help accelerate deployment and scale, especially in fields such as cloud computing, generative AI models, and autonomous systems. Still, with the highest-end technology remaining restricted due to export controls, Chinese AI companies will likely continue to emphasize software-driven efficiencies and creative innovation to maintain their momentum. From a broader economic standpoint, Reduced tariffs may provide tangible benefits in alleviating inflationary pressures and stimulating consumer spending within both the US and China. Consumers could see lower prices on tech products, supporting broader economic growth. However, the longer-term benefits are uncertain. This current 90-day tariff truce, while promising, still leaves questions regarding the permanence of these changes. Companies must balance leveraging immediate advantages against preparing for potential tariff reinstatements or intensified geopolitical tensions after this brief respite. Thank you for listening to AI Convo Cast. Please don't forget to rate, review, and share if you like what you hear. Thanks and hope to see you again next time.